All right, let's dive right in. We've all been there. That time of year when one missing document can cause a world of pain for business owners. Yep, I'm talking about the vehicle logbook, and that sudden panic when you realize you don't have one. But don't stress, there's absolutely a way to fix this.
Ah, that question. You know the one, your accountant leans back in their chair, asks it so calmly, and all of a sudden the air gets sucked out of the room. If that question just made your stomach drop, well, you're in the right place.
So let's set this scene, shall we? We're going to call this the July regret scenario. And it's a feeling thousands of us know all too well.
Picture it. It's mid-July. You've had a massive year on the tools, driving everywhere for clients, quotes, picking up supplies. Your car or youth has clocked up, say, 25,000 kilometers. You're already thinking about that sweet, sweet tax deduction.
And then, the hammer drops. Your accountant tells you that without a proper logbook, the ATO, the tax office, has a strict limit. You can only claim 5,000 kilometers. That's it. 20,000 Ks of real, legitimate business travel just vanishes into thin air.
So what does that actually mean for your wallet? This isn't just some small paperwork mix-up. We're talking about a serious financial blow. Let's actually put some numbers to it so you can see what's really at stake. Okay, look at this. The difference is it's wild. On the left, without a logbook, you're stuck with the cents per kilometer method, capped. Your maximum deduction is $4,250. Now look at the right. With a logbook, you claim your actual costs for the full 25,000 kilometers. Fuel, insurance, rego, the whole lot. And your deduction? It skyrockets to around $21,500. It's a no-brainer.
So yeah, let that number sink in for a second. $17,250. That's how much money, how many potential deductions you're just leaving on the table. And let's be real, 17 grand isn't just a number on a spreadsheet. That's a family trip to Queensland. It's a solid second-hand ute for the business. It's a huge dent in your mortgage. It's real money that's just gone, all because of a little book.
Right about now, especially if you're watching this sometime in December or January, you're probably thinking, great, thanks for making me feel even worse. It's obviously too late for me this year. Hold on. That is the single biggest myth we need to bust right now.
That's the little voice in your head, isn't it? The year started back in July. I've missed the boat. I'll just have to take the hit this year and I'll start fresh next time. Sound familiar?
Stop. Just stop right there. That way of thinking is completely wrong, and it is literally going to cost you thousands of dollars. Here's why.
This year, this is the golden rule. The ATO doesn't need a logbook for the entire year. They just need a continuous 12-week period that's a fair representation of how you normally use your vehicle. Just 12 weeks. That's it.
So let's look at how this plays out. If you start your logbook today, let's call it December 17th, your 12 weeks will be done and dusted by the middle of March. That's way before the financial year ends on June 30th. You have more than enough time.
And here's the absolute best part. Once you've got that 12-week logbook done, the business use percentage you figure out from it, you can apply that to your vehicle expenses for the entire financial year, all the way back to last July. You haven't missed out on anything.
Okay, so when you see how much money is at stake, another little temptation can creep in. The little voice that says, hey, why don't I just, fill one out? Let's talk about why that is a truly terrible idea.
Let's be crystal clear about this. Grabbing a logbook from the newsagent and just making up 12 weeks of trips isn't some clever workaround. It's tax fraud, plain and simple. And with today's technology, getting caught is not a matter of if, it's a matter of when.
You might think, how would they ever know? Well, the ATO has access to a ton of data. They can check your e-tag records. If your logbook says you were on a job site but your tag pinged a toll on the other side of town, you're busted. They can look at the odometer readings from your service receipts. And if you use an app and try to backdate entries, the digital timestamp gives you away instantly. It is so not worth the risk.
Okay, so we know the problem, we know the cost, and we definitely know what not to do. So let's flip this around and talk about the solution. Here is a super simple 3-step plan to turn that panic into action, starting right now.
This is it. This is all you have to do. 1. Start today. Not tomorrow. The very next trip you take, log it. 2. Pull over, take out your phone, and snap a picture of your odometer reading right now. That's your starting point. And 3. Be consistent. For the next 12 weeks, log every single business trip, even the quick run to the hardware store. It all adds up. And honestly, that's it.
You do those 3 things, and by the middle of March, you will have a perfect ATO-approved logbook in your hands. You can walk into your accountant's office next July feeling cool, calm, and collected.
This quote just says it all, doesn't it? Look, we can't go back in time. We can't start that logbook we promised ourselves we would 5 years ago. But the one thing we have complete control over is what we do right now. And the absolute second best time to start is today.
So, it all comes down to this one simple choice. Next July, when you're sitting across from your accountant, what's it going to be? That familiar gut-wrenching panic or the amazing feeling of relief? The choice is entirely yours, and it starts with your very next trip.